Thanks for tuning in. I see you're passionate about your future, so we're going to dive right into it. What I will be covering over this video is stop loss placement, which is very, very important. Stop loss placement will most likely determine your RR, so definitely need to know when, where, how to place your stop loss, right? So what I mean by that is some traders, well, most traders, I believe, have a fixed stop loss amount, like 10 pips or 15 pips, maybe 20 pips, I don't know, right? But most of the time it's 10 or 15 pips, fixed amount. And I don't really like that strategy of placing your stop loss because I believe your stop loss must make sense, right? So just having a fixed 10 pip SL all the time might not make sense depending on that setup and that situation. A 10 pip fixed stop loss could be too large and your stop loss is way too big and that doesn't make sense. Or it can be too tight just because it's a fixed amount and now that 10 pip stop loss is hugging the last candle when it really shouldn't be. It needs to be a little bit more room. So it really has its pros and cons. I believe more cons than pros. Honestly, every setup is differently, so I will set my stop loss differently every setup. So I'm going to go over that stop loss placement with you guys so you can really see how I place my stop loss and in what situations I will kind of move it or place it where and why. So right here we have EA, Euro odd on the on the 15-minute chart, of course. You know, as soon as I come to the market, I'm looking for my setup and my strategy on the 15-minute time frame every time. And then we're scaling into that 5 minutes to get that sniper entry. And then 1-to-1, stop loss to break even, continue running the trade, let your runners run. So when I came to the market, this was December 12th. So when I came to the market, obviously it's Q4, right? It's December. This is going to be my last week trading. I'm going to be done trading December 16th. So at the end of this week, I'll be done trading, right? Just because it's Q4, so the market is still volatile. It's still a little tricky. You don't want to be in there and be a part of some news or some type of liquidity grab or anything like that, honestly. So Q1 is what we're definitely waiting on, and it's right around the corner. So no reason to rush and try to jump into a setup in Q4 and possibly blow your account. So when I came to the market right here, I saw that we had a demand zone, right? This is a demand, excuse me, sorry, can I get this? There we go. This is a demand zone. Let's zoom in on this so you guys can really see this. The last red candle, right? The move, this green candle breaking the demand box, and the next candle never pulled back to the candle before it, which is the top of our box. So this is the gap in the market. This little small gap right here, which is where price want to come and fill in and let the other traders in to go or continue up to the upside. So we must know that this is a demand right here and we keep track of it, right? Up here, we got some resistance. You know, I mark up my support and resistance a lot different than majority of the traders, so we'll go over that for another video. But the point is, you're knowing that if you get in on this demand, that this resistance could be possibly a TP3 or whatever your stop loss is, but definitely a TP, right? Definitely a key area to hold to, that it wants to fill in this gap and head towards this resistance. So that's just good to know. So right here at this point, we can scroll down to the 5 minute to get that sniper entry. Since price is so close to our demand zone, we don't want to miss that entry. So this is where we are, waiting on price to come and touch and see what we get. So let's let this play out a little bit. So we get a couple touches. So let me show you, let me speak on this right here. So we see when price comes down aggressively and then a doji, green doji. So it's slowing down, right? You see these wicks at the bottom of the candle. You see these wicks? It's really slowing down. But we did not get a break of the candle. Look at this very closely. That's why you have to be patient. Because if you're rushing and you get in just when it touches the zone, which is getting in aggressive, right? Or you want to get in early because you see it's kind of pushing up here. No, we're waiting on the break of that candle. So yes, this would have been a perfect entry. If this red candle would have broke above this green candle, I mean, that would have been perfect. That would have been perfect. And in that scenario, my stop loss would have been right in this area, right? Would have been right in this area. It would have been like a 5 pip stop loss. And then if we go to that 10 pip stop loss, that fixed amount, or even 15, we'll see that that stop loss just doesn't make any sense. Not at all. Not at all. Not even the 10 pip stop loss makes sense. That's just too large, right? So you would want to do something more like this if it had broke when it was supposed to. But we haven't had a break of the candle yet, so we're still waiting on the break of the candle. Let's see what price wants to do. Boom. Right there. Right there. Right there. Break of the candle is right there. The last red candle, right? This last red candle was printed. This green one came up and broke the high. Broke the high of the candle. And this is a demand. So that is our buy entry right there. So in this situation, obviously I'm not going to have the stop loss hugging the last candle, right? I'm not going to do that. Why? Because it came down pretty aggressively, right? I mean, this is an aggressive break, of course, but it came down pretty aggressive, right? It didn't want to break right here. So with that being said, prices just let me know it might not be ready to take off yet, and it still might not be ready. So we want to give this a little room, right? Just a little room. And we can go get our 101, which is automatically got hit. And then we can continue to let this trade play out, and you will see, I mean, that this just went to the moon, right? I told you that this resistance was a key area that you could have held to. And you see there, you have a 1 to 5 risk reward, right? 1 to 5. Now, some people will put their stop loss underneath zones regardless. Doesn't matter if it's a demand or a supply. If it's demand, they put it on the bottom of a zone. If it's supply, they put it at the top of the zone. Doesn't matter where it breaks inside the box. So with me, only time I'm putting it underneath the zone or above the zone is if price comes somewhere down in the zone, like around here, right? If price comes down here and then breaks, I'm not going to have a type stop loss right underneath the candle. I'm going to put my stop loss underneath the box, underneath the zone, because it has no reason breaking that box or breaking that zone. But price is that deep, so we have to respect it and give it some room to fluctuate and breathe. If you don't, and you continue hugging your candles on these tight stop losses for no reason, you're going to continue to lose for you to win. And the only way you're going to win is if you're not scared enough, if you're not scared to hop back in after you've lost. So, I mean, that's a tricky situation. And I mean, God forbid you lose both of those. Now you get into revenge trading and up in the loss, trying to get all your money back, and it's just a slippery slope. You know what I mean? So definitely want to give your trades and your stop loss some breathing room, so that it can fluctuate some and then go in your favor. We don't want to continue to lose just to win. We don't want that. So what we have here is my stop loss would have been something like that. Easy money. Something as simple as that, right? Because it's not too deep in the zone. It was slowing down, so no need for a huge stop loss. I just need to give it a little room just in case it's not ready to take off yet, because it came down so aggressive. You just have to read what price is telling you. You have to read what price is telling you and make sure your stop loss makes sense. All right, so let's get to this next setup so I can breeze past that one real quick and show you guys some more stop loss placement. Our next setup, we have odd Swiss on the 15-minute time frame, of course, looking for our strategy and looking to get into a setup. So right off bat, I see a supply right here, and I also notice, let's get this to right, boom. And I also notice that this supply actually breaks structure to the downside because of this little tiny support right here, right? If you're seeing these baby wicks, that's why you got to know how to read price. If you're seeing these wicks, price goes up, comes down, touches, goes up, comes down, touches, and takes off, all these mini wicks, that is support. And this supply comes down and breaks structure, because this is structure, and throws us a 15-minute setup. So if you watch my other videos, my previous videos, you know that I love this setup that breaks structure. So let's mark up our supply, and we also have a resistance, well, a support down here as well. So I have to know that. So this would just be a key area, like a TP3, TP4, or something like that, or just a area to fill, an area that price wants to go to, just a key zone. So it's good to know where you can hold your price to and what might be your TP. So at this point, we can scroll down to the 5 minutes to get our sniper entry when price comes back and fills in our gap and throws us in. So we're just waiting at this point. Boom. Literally that fucking smooth. So as you see, it's in our zone, right? You see how deep it comes into our zone as well. I told you guys, it can come way up here. As long as it doesn't break this box, it's still a valid setup. So this is kind of deep into our zone, but this candle, this inverted hammer, we love this rejection candle. We love this rejection candle. This is what you want to see at your zone as well, to understand that price is letting you know that it wants to go to the downside, right? It's rejecting. You see we get our break of the low right here with this red candle on a supply. We're waiting on the break of the low to get in for the sale. So let's see here, we would have been in right here, right here for some liquidity, 1-to-1. That support down there is up to you, but when it comes to this stop loss, right, I'm not going to have it hugging this candle. I'm not going to have it hugging the candle. Hardly ever do I do that anyway. I'm always giving it a little room. It just depends on how much room I'm giving it, but I'm never hugging the last candle. I mean, I'm just not doing that. I'm not hugging it. You know what I mean? I'm just not. It might want to come back up there, do a double top type of situation or something, and I just don't want to lose to win. So I might give it a little room like that, right? Or even that's a little too much. More like this. This is what I would do. Just a tad bit of a room. You know what I'm saying? Just a tad bit. Now, if we go and see the people that's putting it above the box, we're looking at an 8 pip stop loss. And of course, the people that got the mandatory 10 pip stop loss, that just doesn't make any sense. Or a mandatory 15 pip stop loss. I mean, guys, when you spread out that SL, that spreads out your TP1 as well. Your TP has to be, well, your TP1 at least has to be the same amount of pips as your stop loss. So you're really harming yourself with this big ass stop loss now that you have to go and get more pips to get your 1-to-1. So that's why I don't like the pip, like the fixed pip amount, the 10-15 pips, right? Because every situation is different. So I wouldn't have had this one to the box either, because it's just not that deep into our zone. If price was like up in this area, I probably would have, you know. But just on the pro tip, you see we also have a 5-minute supply here that it touched into and now breaking. So that's a 15-minute setup and a 5-minute setup breaking at the same time. So definitely know that this is a powerful trade. Let's see what price wants to do. Right, we get a little bit of pullback. You have to be able to stomach this pullback right here. This is nothing, especially seeing what happens. You have to stop trying to pull your losers early. Stop getting FOMO. Stop all the rookie stuff. And you see where the price heads. Right to our support, just like we said. And we see we got a 1 to 4.5 RR. And so was our last trade. So that's 2 trades in one day. That's a 1 to 5 RR. And it's just a beautiful textbook setup. You know what I mean? This is textbook stuff right here. So your stop loss matters. Your stop loss matters. It's very important. It's going to affect your RR, right? So we must know when and where to place it to where it makes sense, to where we're not losing to win, but we're not having this big old stop loss that it's going to take forever for us to get to TP, even if it does get to TP. So that's all I got for you guys. I hope you got something from this video. If you liked what I covered, please like, subscribe, comment, share, hit that bell notification so you'll be notified when I post my next YouTube vid. More content like this coming soon. Yeah, replay this video if you need to hear it again. It's going to be a part 2 to this, because there's some more little golden nuggets I want to give you guys when it comes to placing your stop loss. But this is definitely a great area to start, and to know that, first of all, the fixed pip amount we don't do. Every trade, every setup is different, and we treat it accordingly. So I'm Mr. Unorthodox. Thank you guys for tuning in. Keep thinking outside the box. Peace out.